believe me, 3 months from now, 6 months from now, everybody's going to be talking about this. Real wages taking up. Everybody's going to be talking about that. And that's something we're going to see play out in 2024. Real wages improve at the most impressive clip, in my opinion, that we've seen in a long, long time. Because inflationary numbers will be so low for most of 2024, and because wage increases are still there. So holiday spending on the rise despite weak consumer sentiment survey finds. Alrighty.
Over the economy and other issues, they do plan to spend heartily this Christmas season. Steve Leisman joins us right now with the results of the latest All-America Economic Survey. And Steve, they are running out of days to do it.
Yeah, it's time to shop. That's right, Becky. But the CNBC All-America Economic Survey pointing to a green and a blue Christmas spending season. Green because Americans say they're going to spend more. Blue because they are decidedly downbeat on the economy. Take a look at our data here. 18% say they're going to spend more. That's up from 11% last year. 3%.
Yeah, 18% say they're going to spend more this year. Well, shoot, with inflation, I'm sure you should spend more, right? 43% say about the same, and 37% say spending less. So basically what that smells like is the consumer's in a better spot right now than they were at this point last year. Which kind of goes into my whole theory about next year, which is the consumer is going to be in a far better place in 2024 than they've been in 2023, right?
They're going to spend about the same, and you call it 4% fewer say they're going to be spending less. That's good news. We see average spend up double digits, driven both by inflation and by people being paid more, but it contrasts with our sentiment data, which improves slightly, but it remains depressed. Those who are optimistic now and for the future,
sentiment will come through in 2024. It will pick up in 2024. I'm very confident of that. Is it going to reach all-time highs? No. But is sentiment going to come back quite substantially in 2024? Absolutely. Now, so optimistic versus pessimistic. So optimistic, geez, the number's so low for optimistic. That's insane. That's insane how low optimistic, right? And then pessimistic right there. Wow. That's intriguing, right? Wow.
15% now, and for the year, now, by the way, this is up a little bit on the quarter, but this is the year for the average, 66% being pessimistic now and for the future is a record high in the 17 years we've been doing this. So we've never found people more depressed and never found them spending more. This data continues this conflict we've seen between lousy sentiment data but robust spending data. We have low unemployment rate. We had strong GDP growth in the third quarter. And the November retail sales were pretty good. Okay, let's look at who is spending more. Young versus old spending more. Democrats versus Republicans, they're more upbeat on the economy. And African-American adults versus white adults spending more. Why are they spending more? 32% say it's because they're being paid more. Now, 24% say it's because things cost more. And then there are those who say they have more people to buy for. What about those spending less? Well, that's where the inflation number comes in. Spending less because things cost too much, not liking the economy, and those, of course, some being paid less. As you would imagine, the poor sentiment data showing up in even worse numbers than we've registered in the past for President Biden. We're going to have that report on the 10 a.m. hour, or you can read it all right now, guys, online at CNBC.com. Becky?
Steve, the spending, everybody keeps, this has been like waiting for Godot. Everything we say, okay, consumers are spending now, but they're not going to spend later. I feel like that has been a broken record we've been listening to.
Yeah, it's interesting. I mean, a lot can be driven by whoever's in office in terms of people feeling like, good about things, right? And for Republicans especially, they feel a lot better if a Republican's in office, right, than a Democrat. And so that makes them feel better about the economy. Democrats, on the other hand, they don't pay as much attention, and I'm talking as a whole, right, don't pay as much attention to the economy, but they're much more likely to feel bad about the way the country's being run and social related things and things like that, right? And if you were to do sentiment surveys about like how Dems feel when a Republican's in office, like when T-Man was in office, it was insanely low in terms of his approval when it came to that. But Republicans felt great about the economy. So both sides kind of look at things a little bit different, but a lot of that runs sentiment depending upon who the president of the United States is. It's a little crazy, but that's the way it is, man. If somebody's guy's in office, They love it. And if their guy's not in office, they're like,
The last couple of years.
Yeah, it's true. People have been sort of forecasting the demise of the consumer for a very long time.
That's why I don't vote for I never vote, because I get to be happy all the time. Instead, all these other people are depressed for 4-8 years. I'm like, I'm not going through y'all's depression, okay? I'm literally just going to be happy all the time. You guys can play that game. Oh, my guy's not in office. This sucks. Everything's bad. You guys can play that game. I'll play the game of be happy all the time.
I think I've told you my theory on this is that all the economists and the forecasters and the analysts, they put a lot of weight on the money that consumers got from the government. And I think they put less weight on the idea that both many Americans are employed with that low unemployment rate, and that wages to an extent, especially on the low and the moderate end, have come up, Becky, recently just in time for the holiday season. We now have real or inflation-adjusted positive income growth, and that, I think, has to help. The other thing you find, Becky, I think...
They're starting to talk about it. Wow.
You're out there shopping, you're wondering, well, how do things look for me next year? People are relatively confident in their jobs. We have other surveys showing good confidence that people are not going to lose their jobs, Becky.
What did I tell you guys? I said, you watch. Everybody's going to start talking about what I've been talking about the last several months, which is so important. And believe me, 3 months from now, 6 months from now, everybody's going to be talking about this. Real wages ticking up. Everybody's going to be talking about that. And that's something we're going to see play out in 2024. Real wages improve at the most impressive clip, in my opinion, that we've seen in a long time, because inflationary numbers will be so low for most of 2024, and because wage increases are still there. So anyways, there's absolutely no fear in this market at all. So first off, I want to show you guys proof that there's no fear in this market. Like, what do you look at to kind of judge that, right? Second thing we're going to talk about, which is where things get really exciting, how long does this last for? I'm going to take you through the last 15 years of the market, and I'm going to show you how long these periods actually last for before they end and people start getting more bearish on the market, okay? We're going to talk about when is fear going to creep back in the market based upon historical data and based upon, calling it, my feelings as well. And then the last thing we're talking about is how to position in a no fear market like we're in right now, right? How do you position, like what type of stocks do you want to be buying versus kind of avoiding in this sort of market? So we'll speak about that in this video as well, okay? First off, let me show proof that there's no fear in this market, okay? First thing I like to look at is something like the AI investor sentiment. Now, we are in, this sentiment survey is insanely bullish. This is how investors feel about the market for the next 6 months. Now, first item I want you to pay attention to right there, 52.9%. This is as of yesterday, literally. 52.9% of investors in the market are feeling, let's just call it very bullish on the market for the next 6 months. We're down to only 20%, just over 20% are bearish on the market. Now that compares to a historical average of 37.5%. So we're about, let's call it over 15 percentage points higher in terms of amount of investors bullish on this market. That's incredible. As far as bearishness in this market, it's pretty much non-existent at this point in time. Only 20.9%. The historical average is 31%. So we're extremely more bullish on the market as an investor group, extremely less bearish on the market for the next 6 months than average, right? No, we just hit literally a 1-year bullish high, literally yesterday. That's a 1-year bullish high. So we're the most bullish we've been at any point in this past year, which has been a very bullish year in general, right? Now that compares, and look at how fast things can switch as far as bearishness and bullishness, because we hit a 1-year bearish high just back in November, actually, which is pretty fascinating to see from that perspective, right? If you look at the fund manager survey, it's the most upbeat it's been since January of 2022, before the Fed went crazy with all their rate hikes, right? We're the most upbeat since then. If you dig in here, this is really intriguing. The bank found sentiment improved to its least bearish level in nearly 2 years in December, from 2.5 to 3.4, while cash levels have continued to drop this month, down from 4.7% in November. So now they're at 4.5%. In October, they were 5.3%. So cash is dropping. Obviously, fund managers are putting money in the market, which is exactly what I told you guys was going to happen. 2 months ago, I called this out. I said, watch, these fund managers are going to try to chase this market. They're underperforming the indexes, and they need to play catch up. And 100% is exactly what's played out, right? In terms of economic outlook, Most managers, 66% forecast a soft landing. I would say that's pretty dang bullish. There are still 23% expecting a hard landing. So if you're wondering, are there still more people to bring over to the bullish side? Absolutely. Abso-dang-lutely. There's still a lot of fund managers to bring over to the bullish side. And maybe those people all get brought over in 2024. We'll see, right? But yeah, if you're thinking, have we ran out of bulls yet? Which is something you kind of like to think about in terms of tops in the market. Have you ran out of bulls? Is everybody that could be bullish already bullish? The answer to that is absolutely not. We still have a lot of people to bring over. We're getting to a much more bullish market now at this point in time, right? But there's still a lot. 23% expecting a hard landing. There's still a lot to bring over to this bullish side before it's all said and done, right? If you want to look at some stocks, I mean, these are no fear moves. The firm's up 429% this year to date. That's a no fear move. That's insanity. That's pure no fear. Like, people are not scared. If a firm stock's up over 400%, Coinbase is up 405%. That is a no fear move. Talk about not being scared. What about the hood? Look at Robinhood. Robinhood, 61%. This stock is up in the past month. 61%. This is no fear. So the bottom line is, there's no doubt there's no fear in this market. We're in a very bullish market. We're in a very aggressive market right now. Is it the most aggressive I've ever seen, most bullish I've ever seen? No. That was end of 2020 going into 2021. That was the most insane I've ever seen. But is this one of the most no fear markets I've ever seen? Yes, it is. Okay. So next questions we got to answer, and I'll answer both of these now. How long does this no fear market last, right? And when will fear come back in the market? Well, check this out. Okay. We've had 7 straight weeks now at this point in time, 7 straight weeks of what I would call very bullish sentiment numbers, okay? 7 straight weeks. And when I say very bullish sentiment numbers, that would be anything over a 40% bullish on the AAIA investor sentiment numbers, okay? Now you might say, okay, how does this track in history? Is this the most bullish period we've ever had? And I'm just going to show you the past 15 years since I got in the market 08, 09. Let me put it like this. This is not even remotely close to the most bullish period we've had in the market in the past 15 years, okay? Check this out. So this was in late 2009 going into 2010. 9 out of 10 weeks were very bullish, okay? These are all the bullish numbers here. These are neutral numbers, and these are bearish numbers over here. So clearly, end of 2009 into 2010, people started getting very bullish on the market. At that point in time, most people started to come to the conclusion that the recession worst was behind us and that it was going to get better moving forward. Obviously, some of those people already came to that conclusion kind of around February, March, April of 2009, but a lot of people still weren't sold. A lot of them are still pointing out all the bad stuff. And then slowly you started bringing more and more people over to the bullish side toward the end of 2009 and as we went into 2010. This is the most bullish period I could ever find in the last 15 years. Absolutely incredible. We had 24 straight very bullish weeks. 24 straight, folks. It started September 9th, 2010 and lasted all the way to February 17th, 2011. 24 straight weeks of people very bullish on the market, with this December 23rd number being a shocking 63.2%. We're very bullish on that week. Oh my gosh. Absolutely incredible, right? 24 straight weeks. Now, if we look at this time period here, this was at the end of 2011 through the beginning of 2012. We had 14 straight very bullish weeks in that particular time period there, right? Now, right here, this was toward the end of 2012, going into the beginning of 2013. We had 12 of 13 very bullish weeks during that time period there. Right here, this is toward the end of 2014. Going into the beginning of 2015, we had 13 of 14 very bullish weeks. So when you're looking at all this, and I'm showing you this one by one, you say, okay, we're at 7 very bullish weeks. The moral of the story so far should be, you could have a lot more very bullish weeks in a row before you finally break trend, okay? Check this out. This was at the end of 2016, going in the beginning of 2017. 9 straight very bullish weeks. Now, by the way, have you noticed something about the dates? Have you noticed something? I hope you have. That something is, guess what? A lot of these time periods are happening in the fourth quarters. people tend to get much more bullish at the end of a year going into a new year, right? I mean, look at how many of these we've looked at, and look at all these time periods where it's at the end of a year going into the next new fresh year, right? Which, guess what? Right now we're 7 straight very bullish weeks. We're at the end of a year, right? About to go into a new fresh year, right? Isn't that incredible? Check this out. Guess what? This is another end of the year going into a new fresh year. This is the end of 2017. We ran all the way until February 22nd week of 2018. 10 of 11 very bullish weeks in the market. By the way, if I recall, then shortly after that, we had was it a Volumegeddon after that? And then we had a very rough end of 2018. I remember that. That was a vicious bear market we went into at the very end of 2018, right? 10 straight very bullish weeks. This started at the end of 2020. Guess what? Another Q4 started at the end of 2020 and ran into the beginning of 2021. Once again, that was one, in my opinion, that was one of the most bullish markets I've ever seen. That was the most bullish market I've ever seen, at least from the retail side. There was just like craziness. I've never seen anything like that. I don't think we'll see anything like that ever again. And if we do, it's going to be a decade, 2 decades from now. That was crazy time period, okay? This right here, 13 straight very bullish weeks. This happened, we can call it February 11, 2021 through May 6, 2021. Obviously, that whole end of 2020 into 2021 period was its own time period of just extreme bullishness, right? And once again, we've had 7 straight very bullish weeks here put together all in a row, with the highest and the most bullish actually being the most recent week, right? So, moral of the story is, in terms of if you're thinking how much longer can this last, we could keep this up for anywhere between 1 more week and potentially 2 more months of just knocking it out, very bullish, and people just remaining extremely bullish in this market. And remember, when people are remaining very bullish, they're going to continue to buy, right? Generally speaking, like, people aren't going to be bullish and not buy. They're going to buy, and they're going to buy, and they're going to buy stocks, right? So the moral of the story is this is probably going to continue on here for at least a little bit of time, right? It's just a kind of more of a debate. Does it last a couple months? Or excuse me, a couple weeks or a couple months? I think that's really the only debate at this point in time. A couple weeks or a couple months? No, in my personal opinion, right? I told you guys that I think there's going to be bearishness creep in Q1. At some point in time, we're going to have a big sell-off in Q1. I don't know if it's more January or more February, or maybe it's more March. Maybe, people come to the conclusion maybe the Fed's not going to drop rates or something like that. But I do believe we're going to have some sort of big bearishness creep in. It maybe lasts for a few weeks, maybe lasts for a month or two. But and the reason this bearishness is going to creep in, let me be very clear about this, okay? Let me be very crystal clear. Listen, they're going to blame it on something. I don't know what they're going to blame it on. Maybe they're going to blame it on what's going on in the Red Sea. Maybe they're going to blame it on inflation coming back in 2024. Maybe they're going to blame it on, maybe the Fed's not going to cut rates. I'm not sure what they're going to blame it on. They'll blame it on something. I promise you that. They're going to blame it on something. And there will be a moment where Wall Street just is looking to take some profits, especially in a lot of these big techs that have been huge money makers. They want to take some profits. I'm telling you, they don't want to take them right now in this tax year, especially given that Santa Claus rally and they need to play catch up to the market. But they're going to be looking to take some profits either in January, February, likely. And so that's likely to play out there. And then you'll see bearishness creep in, and the bears will come out of hibernation. Everybody's going to get rolling on. And that will be talked about, right? And that goes into kind of a little bit about Tom Lee's opinion. Because if you watch my video I put on the reaction channel last night that dove into the Tom Lee big interview he did on CNBC yesterday, right? And if you watch that, Tom Lee said he's bullish on the second half, but he basically said that the first half's not where you're going to make your money. So Tom Lee's not really bullish on the first half of the year, which kind of fits a little bit more into my criteria of, remember, I'm talking about this, pullback that's likely going to happen at some point in Q1, right? Remember, that's opposite of 2023. 2023 was just booming the first half of the year, right? We've gotten gains in the second half of the year, but if you're looking, where was the big money made in 2023? The big money was made in the first half of 2023. The little money's been made in the second half of 2023, right? And so kind of a little bit of an opposite situation. So I'm like, I could kind of foresee this happening, right? Now, this leads into this whole dealio, right? Which is, this gentleman tweeted out this, and I showed you guys this in a video over the last couple days here, right? About the market. And I mean, we've never had a down year. If we go all the way back to 1950, we have never had a down year after having what has transpired in the last 2 years. So the market will likely be green anywhere between 7% and 19% in 2024. It's, it could always be a first time, right? It can always be a first time, and we break this trend, and then it's like, oh, that was the one time it didn't happen. But likely will be green in 2024. But if you're thinking, how do you get to that green? You can get there a lot of different ways. One is the first half of the year is weak. Second half of the year is where you get your returns. You could also get the opposite. You could also get this scenario, which I've been thinking about is potential, right? Maybe a rough Q1 and Q4, but a really strong Q2 and Q3 where we really get our gains, right? That's a real potential. Imagine a scenario where, we get the big sell-off at some point in Q1, which is, once again, it's going to be blamed on something, but it's because they want to take some profits, right? And then suddenly, let's imagine election time comes, Q4. Let's imagine that's a big mess, freaks everybody out big time. And so maybe you have a sell-off in Q1, maybe you have another sell-off in Q4, but Q2 and Q3 are so strong, maybe those are a little bit of Goldilocks time, maybe the Fed's actually cutting there. I don't know. That's a potential, right? Also, this could be a potential as well. A strong Q1 and Q4, right? You never know. Maybe people continue to get more bullish and more bullish on this market as we get into January, February. Maybe earnings come out and are really strong, much stronger than a lot of people anticipate, especially from the strongest, biggest companies in the world, right? And then all of a sudden, maybe Q1's actually turns out to be great. And then maybe we have a weak Q2 and Q3 because people are scared about the election, scared about the Fed and what they're up to, and maybe all that's overhyped and overblown, and then maybe we have a strong Q4. You never really know, right? I would say this is probably the more likely scenario. So you got to understand, we could have a green year next year, but we can get there many different ways. No different than if you wanted to map out your location to your friend's house, right? There's probably a lot of different ways you can go there. Unless your friend lives super close, by the way. If your friend lives next door, then maybe not. But if your friend lives, across town, there's a lot of different ways you can get to your friend's house, right? And so that's kind of the moral of the story in regards to this whole situation about 2024 should be a green year. It's just, it might be very volatile and a little messy in terms of getting to those gains, right? All right, guys. Appreciate you joining me as always. Much love. Thanks so much for being here. Thank you for being subscribed, and have a great day.